Alright, folks, let's talk about what's called Wall Street buzzing right now because honestly, it feels like the market is drinking a little too much caffeine. Everyone's way too optimistic, and I want to break down what's happening so you're not left scratching your head. Here's a big headline. The Federal Reserve, led by Chairman Jerome Powell, is meeting this week for the FOMC. That's short for the Federal Open Market Committee, basically the Fed's decision-making team for interest rates. These meetings are where they decide, do we raise rates, cut them, or leave them alone? Now here's where things get wild. Big banks like Morgan Stanley and the Deutsche Bank are lining up with the same bold prediction. They think the Fed is going to cut interest rates not just once, not just twice, but three times before the year ends, September, October, and December, back to back to back. And each cut would be 25 basis points. So a basis point in finance slang for 0.01%, so 25 basis points equals to 0.25%. Doesn't sound much, but trust me, when you're talking trillions of dollars in the economy, even a 0.25% can shake up everything from mortgages to stock prices. Until recently, most analysts thought the Fed would cut in September and maybe again in December. But now, Wall Street is acting like Powell is going to swing the scissors at every single meeting left in 2025. And get this, Morgan Stanley even went as far as saying once the Fed starts cutting, they might not stop for 6 more meetings straight, rolling into the next year. That's like saying once Powell opens the floodgates, the water just keeps rushing. And I can just picture Powell scrolling his phone in the morning like, wait a second, did Morgan Stanley just schedule my moves for me? The man has to be thinking, are these guys serious? It's like Wall Street is writing the script and expecting Powell to follow along. But here's the catch, he doesn't have to. So why is everyone betting on aggressive cuts all of a sudden? The main reason they're pointing to this is the labor market. Jobs are not looking as strong as they used to. Companies are slowing down hiring. Some are trimming staff, and the growth in wages is cooling off. Powell has made it super clear in past speeches that he will not sit back and watch the labor market collapse. The Fed's job isn't just fighting inflation, it's also making sure people can stay employed. That's why banks are shouting, cuts are coming. Right now, major investment banks are putting the odds of a rate cut this week at about 95%. That's basically Wall Street saying it's a done deal. And Standard Chartered, they've taken it a step further. They're calling for a 50 basis point cut, which is 0.5%. That's a big swing in one shot. But here's where I think investors need to keep cool. Just because the banks are hyped doesn't mean Powell is locked into their playbook. Remember, Powell's job is not to make Morgan Stanley happy, it's to keep the US economy stable, and he's known to play things slow and cautious. Imagine if Powell steps up to the mic this week and says, you know what, we're only cutting once, not three times. The market could freak out, and that hype could turn into panic real quick. So my advice, don't FOMO, fear of missing out, into trades right now just because Wall Street is betting the farm. Rate cuts usually give stocks a boost because cheaper money makes investing and borrowing easier, but if Powell pulls back, that boost could disappear in an instant. The stock market doesn't like surprises, and right now it feels like everyone's betting on the same surprise. That's why I tell people, stay informed, stay calm, and don't just trade on headlines. The Fed has the final word, not Morgan Stanley. And while optimism is fun, sometimes too much hype can build investors to the risks. And hey, if you're enjoying this breakdown, make sure to hit the like button, drop a comment below with your thoughts. Do you think Powell is going to follow Wall Street's script or will he surprise everyone? And of course, subscribe for more. Thank you so much. I will see you in the next one.